to our series called Simply Multifamily. My name is Kieran Dillon, and I am a broker associate with Keller Williams Commercial in Pasadena, and I specialize in multifamily and apartment sales. I work with buyers and sellers of those properties all throughout the greater Los Angeles and Inland Empire areas. The purpose of this series is to highlight issues and introduce strategies that affect and benefit owners of multifamily properties. Today, we're going to be speaking with Paul Diaz, president of Paul Diaz Insurance Agency. Paul specializes in working with multifamily owners to address their insurance needs. Welcome, Paul. It's great to have you.
Thank you so much, Kieran. It's great to be here, and thank you so much for having me on. I look forward to talking a little about multifamily and insurance.
Great. So why don't you start off by telling us about the services that you provide for owners of multifamily properties?
So we're full insurance brokerage. We offer commercial insurance, which would include multifamily, and we also offer life insurance, employee benefits, auto and home, workers' comp. But we're probably about 60% commercial, 40% the rest. So we really focus on insurance, and a big part of that is habitational or multifamily properties, which has been super challenging, I'd say, in the last year or so. A lot of carriers are getting out of the state of California, or just in general anywhere nationwide. They're really clamping down on writing habitational risk. There's less and less companies writing, so there's still that demand, so the price goes up.
Got it. So that's a perfect segue to my next question, which was going to be, like you mentioned, there's been a lot of changes, right, in the insurance industry over the past couple of years. Can you give a recap of those changes, and then if you have insight into why this is happening?
Yeah, 100%, absolutely. In fact, right before I jumped on with you, I had a meeting with Guard Insurance, which writes a lot of habitational, and they were just talking about how they've been unprofitable. And so I think that's what's happening nationwide. The carriers are unprofitable in the habitational area, and so they're basically like, "Hey, we'll take a retail clothing store, but we don't want apartment buildings anymore. No more apartment buildings, or we don't want buildings that are over 40 years or older." The reason is, obviously, as the infrastructure gets older, you tend to have more problems: pipes bursting, fires, things of that nature. So it hasn't been profitable, and therefore, if it's not profitable, insurance companies are in it to make money. They're pulling out, and so when they pull out, then you got to go to other carriers like, "Yeah, we'll do it, but it's going to cost you triple the price." And so that's why you're seeing rate increases, and you're going to continue seeing rate increases for, I guarantee, at least through 2023. Especially with interest rates rising, that's another factor. So you're really going to see rates jump up on your renewals for at least another year, based on all my meetings I've had with the marketing reps of multiple carriers. And what are the people always ask, well, what are the claims? What's the most? Well, I can tell you the most common claim, and it's hard to fight, is slip and fall. So you got to make sure that your property is well lit, because that's one of the first things they put. I was coming down the stairs in the hallway and there's no light.
Right.
So make sure the property is well lit, and make sure you have handrails. And obviously, you kind of use your fist, the 4 inches. Handrails can't be more than 4 inches, or the railings can't be more than 4 inches apart. That's a big thing the carriers are looking for. So those are the number one thing, is slip and fall. And then, then you have people sue for wrongful eviction or invasion of privacy, or I'm being harassed by the manager on site, things like that. So those are things that kind of keep an eye out for. But that's why, carriers are pulling out. It's just unprofitable, especially in California.
It seems like that unprofitability has really sped up over the past couple of years. Is that what you're saying?
I think so. And I think as the economy kind of, whether you think we're in a recession or not, a lot of people think as the economy kind of slows down, I think people get more desperate. And so you're starting to and we're getting severe weather too. I mean, it's a lot of factors.
Right.
Some of these companies are taking billion-dollar hits like during the Hurricane Ian. And if you're with Travelers in California, it's the same Travelers that insures in Florida. So you're gonna see or there's a lot of freezing going on in Texas. So there's all these severe weather things that affect. And it's been recent. I mean, just look at California. We've had I think 7 of our largest fires in the history of our state in the last 3 or 4 years.
Yeah, that's a great point, that it's not just what's happening in California that's affecting California property owners' insurance. You got to look at across the board.
I mean, it's practically worldwide. I mean, a lot of these companies are global insurers, and they look at profitability as a whole, not just in just this state we're doing good, but in the other ones so you're kind of pulled together. And it's been really, really challenging when it comes to apartment buildings, and we'll discuss some other things, but
yeah,
it's you got to make sure you understand what you're purchasing. If it's too cheap, there's usually a reason why.
Absolutely, you got to do your due diligence. So specifically to multifamily owners, what are some of the challenges that you're seeing when they're trying to obtain or renew their insurance?
That's what I was going to get into. So we get a lot of calls right now because people are upset. Oh, my rate doubled or my rate went up. And a lot of times, being honest, I just tell them, you know what, you're with a good carrier. I do understand that it went up, it doubled, but so is everyone else. And the most important thing is you are going to have to go through another inspection at that property. So let's say that your renewal went from $3,500 to $5,000, which is a big jump.
Right.
You get upset, you call another agent. I always say call your agent first, talk to them. If they're a good agent and they've been responsive, call them and say, hey, I'm frustrated. My rate really went up, and see if they'll shop it for you. Or they may tell you, you know what, this is going to be your best option. But I would call there first. We get a lot of phone calls and people are upset. And I explain to them, look, I can get you, let's say Mercury, I can get you a much better quote, but I need full proof of updates. So electrical, plumbing, and roof. The driveway better be immaculate, no cracks, and no chip paint. It better look perfect.
Right.
If not, what's going to happen is I'm going to place you with Mercury. They're going to come out, do an inspection. They're going to say, hey, Kieran, you need to redo the entire driveway. So there goes your savings. That $2,000 or $1,000 you might save on your insurance, forget about it. Now you got to redo the whole driveway. Or they might say, you know what? You have Zinco or Federal Pacific electrical panels. Sorry, we're gonna cancel you, and then you can't go back to Travelers. Now you're gonna have to go to another market, and instead of paying $5,000, you might pay $10,000 for worse insurance.
Right.
So be very, very careful if you're switching, because you might get basically caught with your pants down, and then it's going to be a huge problem.
Right.
So I always tell people, hold on here. Another thing is, unfortunately, a lot of insurance brokers are not competent. So they'll switch the insured to a policy with, let's say, Guard. Okay. So if you write up Guard policy, new business, it doesn't cover personal and advertising injury. So they give you a great price. Instead of $5,000, they're like at what you paid before, $3,500. Oh, this is great. I got it. This is a great quote. Well, if you read the fine print, it'll say personal and advertising injury excluded. Most people don't know what that covers. That covers invasion of privacy and wrongful eviction. I would think that's pretty important if you're a multifamily owner to have those two coverages. So be very careful if you're switching. If it's something is super cheap, there's usually a reason why it's super cheap. So just make sure that you're providing accurate information, especially when it comes to updates and stuff. And another thing is like loss of rents. Rents have gone up. So has the cost of reconstruction. So I'm noticing a lot of buildings, the rents are not correct. So if the building burns down and you have loss of rents coverage and you don't have the right amount stated, you might lose out on a ton of money. And also
Right.
reconstruction costs. If you think you can rebuild a building in LA County for 125,000 or $125 a square foot or 150 a square foot, you're going to be very surprised if you have a loss. So especially over the last year, construction costs have skyrocketed.
Mhm.
So I would make sure to increase the building coverage to a number you feel comfortable with.
Right.
And increase the deductible to offset the increase maybe.
Right.
But that's been probably the biggest mistakes I see are too low on the building coverage, too low on the rental coverage, and even the liability. A lot of times it doesn't have personal and advertising injury, or they have a huge building with like 30 units and they only have 1 million in liability. I mean, oftentimes you can add another $1 million for really cheap. So I always recommend at least 4 million in liability.
Got it. And that's why it's so great when somebody like you explains all of that. Whereas for a lot of people, I think when they're looking for insurance for their building, like you said, they're just comparing which one is the cheapest one and don't really want to get into the details. It's not fun to read all that paperwork. So it's great to have an advisor like you who can say, hey, wait a minute, you're going to regret this later.
Yeah, no, and sometimes we flat out we lose business because I've been doing this 21 years. I'm a second generation insurance broker. I have seen when you take a shortcut, what happens. When the loss happens, the first thing they do is, they want the best insurance. Oh, what happened? How come my insurance is not? It's like, we went over this. Remember, you didn't want to add this coverage or you didn't want to increase it. And so, we just like if your building is more than 30% vacant, you should let your broker for over 60 days is the norm on a standard insurance policy. You should let your broker know because you might not have coverage. And we've had that where, the building's for sale and it's vacant. Well, and someone breaks in and steals all the copper wiring or something. Well, how long has it been vacant for? Oh, for like 3 months.
Yeah.
I don't know if they're going to cover. So those are things, if there's major changes, whether it's, if there's a major remodel where you're going to vacate half the building or, you gotta be in contact with your broker and just say, hey, off the record, this is what I'm doing. What do you think? And they should be able to give you some good advice. But you don't want to take shortcuts and you don't want to be cheap with insurance. If something happens, you're going to be in a panic.
Yeah. That's really great advice because I see that all the time, properties listed that are vacant. And I didn't know that insurance might not cover it for the owner. Okay.
And in California, where I'm based, there's been a lot of issues with homelessness and vacancy. So it gets cold at night, they start lighting a fire. Next thing you know, the whole building's on fire. Right. So it's vacant buildings tend to have a lot of problems. That's why it's so expensive to insure them. And that's why people don't want to tell you they're vacant because they know it's a lot more expensive. But the reason is things tend to happen. Right.
You're absolutely right. So I think we did discuss this, but just in case there's anything else, what are the top things that you think multifamily owners should look for in their policy, or if you have any other tips that they can use to get good policies, or you may get good policies maybe at a lower rate, but still getting the full coverage that they need?
I think the number one thing, let's say you're buying a building, and I'm also speaking to you as a realtor. If you're buying a building, the first thing I'm looking for are what updates have been done to the building, especially the electrical. Because if there's a Zinco or Federal Pacific panel, no one's going to want you. Not maybe one carrier like a Lloyd's of London, a surplus lines carrier. So you're going to pay a much higher rate for the insurance. Well, the prior owner is only paying $2,000. Well, they may have been grandfathered in. They may have had that policy for 20 years and never even looked at it, and it kind of just got grandfathered in. But if you're buying a building, you're going to go through an inspection with the insurance carrier. And the inspections are good. People look at them as a negative. I look at an inspection as good because it protects you, the owner, the insurance company, and me, the broker, that all the information we provided was accurate. They went out, you looked at the building, you gave the thumbs up. Okay, the insurance is forced, everything's good. If they don't inspect the building and something happens, which I've had happen, then it becomes a problem. Like we had a building that was completely vacant that caught fire, but the insured told me that it was occupied
Oh,
and no
no.
inspection was done. 6 months later, it burned to the ground. And he's like, yeah, the property's, it's vacant. I'm like, what do you mean it's vacant? You told me it was occupied. So now we record all our phone calls.
Right.
We let the client know, hey, we're recording our call just to
Right.
make sure if something like that happens. And we've already had that happen 3 times. So
Oh, no.
if you're buying a building, make sure you're looking for the updates, especially the electrical. If you already have a building and you want to switch carriers,
Mhm.
make sure that the building, trees aren't touching the roof. There's no cracks in the sidewalk or the driveway. Make sure everything is on the up and up, because carriers right now are extremely picky, and you could really open a can of worms by switching to save a few bucks.
Right.
So
Right.
just make sure you understand your policy.
Got it. So what's your outlook on the insurance industry in California?
I think it's going to be a rough year. I think you're going to see rate increases. You're going to continue to see carriers pull out of the market. KBIC, I think it stands for Kookmin Best Insurance Company. It's a Korean-based company. They recently announced that they're no longer writing business in the United States, and they used to write a lot of apartment buildings. They pulled
Okay.
out. Last year, Crusader Insurance pulled out. Unifax. They also wrote a lot of like kind of B standard buildings. They pulled out. Nationwide announced that they're no more convenience stores, gas stations, and they used to write a lot of those. Same with KBIC. So a lot of companies are either leaving the state of California or the United States as a whole, or just certain markets like habitational. So it's really become tough. So going to a broker that has the markets is it's important. So that's why you want to go with a reputable firm and make sure that they're shopping all the carriers and kind of giving you the heads up, like, hey, what kind of electrical panel, letting you know what to expect when you're purchasing insurance. And don't lie on the application, because then later on, if something happens, they'll point out to the app and you could have an issue. So if you have student housing, that's important to let your broker know. If you're mainly Section 8 housing, let your broker know, because the carriers do ask those questions. Is a majority of your tenants elderly or Section 8 housing or subsidized in some way? You got to let them know.
Got it.
Yeah.
That's not a very fun picture.
No,
that you're painting.
it's not a good picture, but on the flip side, and I own some units, right? We haven't had rent increases, and we haven't done any rent increases in a long time. But this year we increased rents. I think it was like 8% or whatever the law permitted in the city we're in. And so I kind of look at it that way, like, yeah, my insurance rates went up, but I also increased my rents to kind of offset that that cost. But people get too caught up in the price. They don't look at the big picture, like, hey, you're getting appreciation, you're getting rent. So yeah, it did go up, your insurance, but so did everything else. I mean, gas has gone up, supply, everything, so you kind of gotta like say, hey, if this building burned down, am I going to care that I got 1,000 in savings, or that, hey, I'm properly insured and I'm going to get the money I'm supposed to get to rebuild the property? That's the most important thing. You don't want to be short $300,000-$400,000 because you saved $1,000.
Right. And you bring up a great point because with apartments, obviously, it's an income asset, and for the most part, you have the opportunity to increase that income when your expenses are increasing. And that's one of the biggest things that I see with a lot of apartment owners, especially when they've had the property for a long time, is that their rents are so under market. And we have so much legislation regarding rents that if you don't keep up with it, you can really get trapped in this scenario where you're 40-50% below market, but now you can't raise it,
Right.
in big enough increments for you to break even with all your other costs going up. So, even if you're just doing a little bit every year, every couple of years, just so that you're not so below market, you can kind of keep yourself from getting stuck in that hole.
No, that's a great point. And I'm guilty of that myself. We haven't had any problems at our location. We actually, one time we had a high speed chase where the car drove in through one of the units, and insurance covered it and everything was fine. But this past year we had about $40,000 worth of plumbing issues. And it wasn't plumbing issues that were covered. It was like a tree root that went through the plumbing. So,
Oh gosh.
and it was old pipes. So, remember, insurance is not a maintenance program. It's sudden and accidental are the key words in an insurance policy. So I knew tree root wasn't going to be covered. I knew the pipes were really, really old and needed to be updated anyway. So we ended up having to fork out that money. And, it's a small 4-unit building and we're getting rents of like $800, $900 for a legitimate 1-bedroom with a garage.
Yeah.
That's really cheap in LA County. I started looking around, the average rents are like $1,400 for that. So by not increasing the rents over time, now I took a big chunk out of the net profit. And I mean, we basically didn't profit this year. So, you're right. You gotta really stay on top of the rents and making sure, just be fair. Like,
Be fair.
always
Right.
be fair. You don't, a lot of these people are, it's tough. So I try to be really fair. They're good tenants. They don't bug. But they even knew, like, wow, we got a great deal, man. You are spending, that plumber's been here for like 3 weeks fixing this. So they kind of expected it.
Right. Absolutely. Paul, thank you so much. This was a lot of information, and I'm sure it will be very useful to our listeners. And I would highly recommend anyone who has questions about insuring their property to reach out to Paul. As you can tell, he's very knowledgeable and he can really walk you through all the steps that you do not want to skip. Paul, what's the best way for people to reach out to you?
They can find us online at pauldiazins.com or just Google Paul Diaz Insurance Agency or Paul Diaz Insurance. And thank you so much for having me on, Kieran. You're one of the best realtors that we work with. You're very thorough, and we appreciate you when you send us stuff and let us take a look at it. And it's great working with you. And thank you so much. And yeah, anytime we can help, even if you're not our client, we're just here to help. And if we can get a policy out of it, great. If not, it's no problem. I look at stuff all the time and just, hey, stay where you're at. You're good, or make these changes and stuff like that.
Absolutely. Thank you so much.